friends, this is Martin from Brokerage, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market quick analysis that we do using the technical charts, and then we also plan for a better trade for the next day. That's Jan 19th, Friday 2024, tomorrow. So we had the fall that continued after the big crackdown that happened yesterday following the HDFC Bank results outcome. So can we expect more correction on the third day? Let's try to find the answer for the same. Meanwhile, here is the market wrap up. The points are blotted here. We'll come back to that, but before that, let's get to see the charts first. So plain candlesticks, if you see the Nifty indices, you can see it's a small body. Looks like a spinning top and a hammer. Anyway, it's not a perfect hammer, neither is it a perfect spinning top. But regardless, it's a small body that shows the indecisiveness. The wick size indicates a support that's the downside. Look at the candlestick on the Banknifty. It's an inverted hammer. Inverted hammer at the top and the bottom of the trend could turn out to be a reversal if the higher low of that is breached. So this could be a reversal if the high of this is breached. High of this today's candle is breached on the upside. Right? That's why it's more bullish. If this would have been on the top, you could say that if the low is breached, it can be bearish. Since this is more or less in not the top of the trend, it's at the bottom of the trend, so its reversal could be on the other side. This is all confirmed only when the price breaches the low or the high. Okay. Yeah, so the fact of the matter is that we had a big fall yesterday with the gap down, and we continued the fall with the gap down today. Probably the gap was slightly close in the Banknifty, while letting it move up. Intraday, if you see, it was like very volatile. So it's a 250 point range in the Nifty and an 800 point on the Banknifty. It was range bound, but it was volatile within that big range. Right? But both started with a gap down. That's what it is all about. So it was a volatile day, more volatile than trending. Yesterday it was fully trending down. Today it was volatile down. Anyway, finally we closed negative with 0.51. That's 110 points lost on the Nifty, and 351. That's 0.76 points lost on the Banknifty respectively. If you put in the channels, you can see it's in the top of the channel, and it's a long way to go to the bottom of the channel. That's coming somewhere to the 2800 levels. For the Nifty and the Banknifty, it has actually breached the bottom of the channel. Right. So that is not good, and it also lost the 100 exponential moving average also. So that is more bearish than what Nifty is showing. So the correction is more or less 6.5% or more on the Banknifty, while here it is 4.5% or something. On Nifty, it's still a long way to go in the case of Nifty. But Banknifty is maybe taking support at the 50 exponential, 50 Fibonacci retracement levels. Right, and the next major support will be only at 44,500 by the 20 for the 200 exponential moving average is the support. That's 1,000 points further down. But yeah, so that's not a very good thing to see on the Banknifty. The HDFC Bank also further fall down 4% or something today, after 8% fall yesterday. Something is wrong in the bank index, or probably the institutions are finding a reason simply to sell after big vertical moves. So let's just quickly wrap it up. So we are still yesterday we were above the 21,500, which is a major support, was considered to be major support. We breached that and we closed below that today with negative 0.5% lost, and if we were thinking that 46 was a big support, we lost that. We lost another 100 exponential moving average as well, and then but managed to close above that 50 we had lost yesterday itself. and we are 6.6%. So that's all. We already talked about all of this. The institutions were selling yesterday heavily, foreign institutions especially. Most institutions were buying. So big selling of the Fyers is what caused the crash yesterday. Today the data is not coming yet. We'll just refresh and see. Yes, it has come into another 10,000 crores, 9,900 crores. So this is serious trouble. It's the Fyers that's selling, and it's the domestic institutions that's buying. So that has to stop. So it's a 20,000 crores of selling by the Fyers that happened in just 2 days, and the market has deep trouble if this does not stop. Right. So this is 9,000 that we are talking about today. Right. So domestic institutions are trying to support, but it's not enough. That's what I was saying. So we have serious trouble with respect to institutional participation. So I have to be cautious. Support resistance levels 21,500 will be the first. It'll be easier to explain that support levels here. So the Nifty support resistance levels, if you see, the first resistance will be the 21,500 to capture that back, because it's a 20 exponential moving average and a gap that's converging there. So that resistance is going to be the first hurdle. After that, 21,969 would be the gap that caused because of yesterday's gap down. That will be the hurdle, and after that 22,125 all-time highs, and then 22,200 likewise upside. Downside, Nifty, the supports first could come in at 21,000. Right. Before that, 23 Fibonacci retracement support can come in at 21,350. 21,350, then 21,000, which is a confluence of Fibonacci extension of 61 and 50 exponential moving average. So 21,000 is a major support. That split you will find some support at 2,900 and 2,700, which has got gaps. Gap, and there is a Fibonacci 38 retracement that is there at 28,860. Right, so that's supports there. And Nifty, the first resistance upside would be the gap. No, we have the 20 exponential moving average 47,300. Before that, 47,000 is, so let's go one by one. So 46,000 will be the first resistance, which is a rounding number, and also it's 38% retracement, which will act as resistance now on the upward journey. Then you have 46,500, which will be 50 exponential moving average, which is the resistance that will be next. Then 47,300, which is 20 exponential moving average, which will act as resistance now. After that, 48,000, big rounding number, and a gap, which would act as a resistance now on the upward journey. So that's the resistance on the Nifty and Banknifty for the next day. I'm going to slip in the sideways in the Nifty, and it is falling to the bear zones of the Nifty. So Banknifty is bearish on short term, and Nifty is sideways and falling. Trend indicator ADX also is showing it has crossed over to bear zones on the short term. And then it's cooled off, is what it has spiked up. So it has cooled off today. Why it has cooled off in the market is market is down, is divergent, right? But maybe an indication that today's fall may not sustain, and it may move probably tomorrow. Anyway, which is cooled to it 14 from the 15 yesterday. Caution has to be exercised as to if the VIX is further climbing up to the 18, 19, 20 levels, then you have to manage your risk accordingly. It's not good for the option sellers and derivative traders if the volatility is increasing to that extent. Volume bands are indicating sideways action on the Nifty and bearish downward expansion on the Banknifty. So technically charts have lost the momentum after the big bull vertical moves, and now Nifty is sideways and Banknifty is bearish already. So it will be extremely cautious because correction has happened only 4% on Nifty. There is scope for more. Banknifty 7% correction has happened. So there is a possibility that it can end the correction at this stage because 7% is decent enough for Banknifty. Reasonable correction, more than reasonable actually, because it happened so fast and so quick, and 7 to 10% is okay. Right? Anything goes beyond 10 to 15% would be not correction itself, bear market, right? So market may decide to take a support at the zones where it is and then it could bounce up. It's possible, but there may be more corrections, that is to the vertical moves that we had. The Nifty especially, Nifty may be consolidating probably after such 2,500, 3,000 points in just 2 or 3 days. Okay? There will be consolidation that can come in unless the correction is leading to a crack or a crash. This may not be crash. This very short term, if you think it's a crash, what happened in Banknifty, that's a crash. So the intensity that happened and the short time duration that the fall happened. So otherwise, if you see the industrial major sectors, it's all red except the auto, pharma and reality, which is showing some green, flattish. Momentum, if you check for short term and daily charts across all the indices of the sectors, you can see it's sideways for all except the IT, pharma and realities maintaining the bullishness still. IT and pharma normally when market crashes, it supports the market. They are defensive stocks. This time reality also is in the growth momentum in short term. The industry heavyweights, they all closed green except the HDFC Bank and Kodak Bank, which is turned into bear zones, and Reliance is the only one that's made it in the bullishness now. So the heavyweight stocks are getting sold, is very much evident. Across the sector also we have lost the bullishness. So time, all we have to do is wait for and see how many sectors are going to the bear zones now. Right? As of now, none of the sectors are going to the bear zone sectors. So it's managing the sideways. The US indices are red again at the top after crossing or tracing from a rally, just like ours. And the dollar is falling. Rupee remains weak. Crude oil is falling. Gold is consolidating at the top. Crude oil is falling at the bottom. No major clues from that. We did maybe an opportunity to invest as long as you are believing that the market direction is up and it's a bull market. The standard direction is shifting right now from the bullishness to the sideways to the bearish. So you have to keep a close watch and get a confirmation that it's a sideways on Nifty also before you switch the strategies to completely non-directional or shift it from the directional strategies to non-directional. And you have to get some more confirmation on the Nifty also that it is turning sideways. Anyway, the trend of the directional up move has paused. That's not there now, because Bollinger Bands are clearly showing that it's sideways and it's actually bearish on the short term. Expansion is on the downside. So that's it. Tomorrow is a Friday weekend. We'll have the weekly charts also. Weekly charts may be forming a bearish engulfing pattern, which is very bad. Not like how it is formed on daily. For weekly, it is engulfing. We can further go down. So that's why also some bearish daily patterns of tri-star patterns of evening star and all that is also confirmed. So overall bearishness is there. You have to stay cautious, have book your profits if you are not done yet, and if you are investing basically, and if you are play it safe, whether for the spikes in the weeks and control the position for the spike up to 20 levels of options. That's all we can do, manage our risk whenever both 30 spike. That's all I have. If you're not subscribed and watching this, please subscribe and share it to friends and colleagues. And so that reaches out to max. And also, keep learning. Happy trading, happy learning, happy investing, happy trading. Bye bye.